Hi, everyone. Welcome back to Your Money Matters. And we got a good one in store for you today. But before we get to that, I just want to let you know that Ted will be hosting an event on Wednesday. Hope to see you all there. There's a link below. He's going to go into detail about his profit switch strategy, which is having incredible success. So please click the link below. We hope to see you there. Today, however, we have a cage match in store for you. In one corner, we have Technicals, Mr. Technical, Clint Lee. You may know him better as Clint Lee. He's our chartered market technician. And in the other corner, we've got our own Ted Bauman, editor of the Bauman Letter, economist, financial expert extraordinaire. And today, fellas, to the death, we are going to discuss Bitcoin. So, Mr. Technical, I'd like to start with you. Clint, where do you see Bitcoin going from here? Let's take a look at some charts. I know you've got some good ones.
Yeah, I like going through the charts, right?
Yes.
I know everyone gets really fixated on, especially with something as volatile as Bitcoin, the day-to-day what's going on. But when I start looking at charts, I always think it's really helpful to kind of frame up the big picture. So the first one I want to show is just taking Bitcoin, going back about 5 years. And this uses it's called a candlestick chart. And these are monthly candlesticks. So it's each one of these bars is capturing, basically the open, the close, the high, and the low for the month. Once again, I think this helps frame up important levels of support and resistance and kind of where things have been and where things are going. So, left-hand side of the chart, the initial run up kind of in 27 or into the end of 2017, that was the initial, sort of crypto craze when it came about. And then, ultimately peaked out around 20,000 and Bitcoin fell back down below 5,000 and really did absolutely nothing for several years. What you can see is that we created sort of this well-defined resistance level right around that $15,000 level that I'm highlighting with the dashed line on here. And then I like to use the MACD indicator in the bottom panel as a way to sort of gauge momentum. If we're just seeing momentum starting to pick up or if it's starting to go a little bit too far. And when we had that breakout over that key sort of 15,000 level, you saw the momentum, the MACD was really starting to take off, that support to move higher. But then just here recently, we've seen price come in some, obviously. You've got this, this big wick on the upside on the candlestick chart on this most recent bar that shows the decline that we've had, which shouldn't be surprising because you look at where the MACD has sort of gotten to on this bottom panel. It's up above levels that were last, going past what we saw in 2017. So just seeing the momentum extended. So with that in mind, if we start to narrow in on the time frames now, the next chart I want to show is Bitcoin, but using a daily chart for the last 6 months or so. And similar indicator in the bottom, we got the MACD. What you can see is we were really extended on the MACD indicator, but the one other thing that I would highlight with this chart on this daily chart is how well the 20-day moving average, which is the purple line, how well that's served as support and sort of trading Bitcoin. If you're trading the trend, the 20-day moving average, I believe this is an exponential moving average, has served you well in playing that. And so we had then this close just below the 20-day. We broke through that. And I've got one more chart I want to show just to get into the details because this break below is actually kind of surprising to me. So the last chart I have to show of Bitcoin here, this is a 4-hour intraday chart. So this goes back about a month. And usually what I'm highlighting with this pattern right here, this is kind of like a pennant pattern that they call it. And it's usually a continuation pattern. And so what that means is typically when you have a pattern like this take place, the resolution of this pattern is usually in the direction of the prior trend. So the prior trend was up. You would have expected to see this resolve itself by breaking out to the upside, but instead we had this breakdown to the downside. And so now here's what I would watch for Bitcoin. I want to go back to the daily chart now for just one moment, because that 30,000 level, we peaked at 40,000. That 30,000 level has served as good support now on a couple different price bars. So that's the trading range I would look to develop right here, sort of that $30,000 to $40,000 trading range. But at the same time, keep an eye on that MACD momentum indicator. As that starts to get back toward sort of that zero level, as that starts to reset at neutral, if we start to see that momentum pick back up as indicated by that indicator, and you start to see a breakout above 40,000, that would signal resumption of the uptrend. I think if you start to break below 30,000, you start to see more weakness in the price of Bitcoin. And just my official opinion on where we start to go long term with those levels in mind, longer term, I see more gains ahead for Bitcoin. I see more upside, and a big piece of that is because of the institutional adoption that we're seeing from institutional investors. You've seen Guggenheim and now recently BlackRock coming out, especially in their allocation funds. And these allocation funds diversify across different investments because there's a correlation benefit, there's a diversification benefit. They've got these huge internal teams that have been doing their work to look at how cryptocurrencies like Bitcoin can help diversify while producing returns, and they're starting to incorporate that into their investment mandate. And forget what everyone is saying about Bitcoin becoming sort of an alternative currency to the dollar or another reserve currency. It's this institutional backing that can provide the most immediate upside.
All right, now, as a reminder, we want to hear from the viewers and where you think Bitcoin is headed next. But right now, Ted, I'd like to hear from you.
Well, what I hear Clint saying is that the reason to hold Bitcoin is because everybody else holds Bitcoin. And that really raises the question of in the long term, is it actually an asset? And I don't think it is. I mean, I think,
Right. Does it have value? Yeah.
Well, it has value because people think it has value. And,
Exactly.
and as I've kind of teased Clint a bit, I've said, we could just launch a ticker, convince everybody that it's worth trading, and then, have people trade the ticker with no real utility, and then have it go up and down and say, well, because there's a market for it and because there's market psychology behind it, we can analyze it like Clint just did. We can predict where it might go and we can profit from it. But that still doesn't mean that it's actually worth anything. I know that there's all kinds of arguments behind Bitcoin, but the bottom one is to call something an asset means it has to have a use case. And people argue that Bitcoin has a use case that it's going to replace fiat currency. Well, you can forget about that. It's not going to happen. I mean, Janet Yellen just said the other day that they're not going to let it happen. And more importantly, the thing is that we're not going to see any moves towards Bitcoin actually behaving as a currency until people start issuing liabilities, debt in the form of Bitcoin. This is an important distinction. The reason why people want to hold dollars is because dollars are how you pay for debt. We know that right now that the whole global financial system depends on being able to use the dollar to pay for oil. That's why people want to buy dollars. It's, so they can, pay for things like oil and other things. Until we see that, it's not a currency. It's basically just a way for people to speculate on the idea that it could be a currency. Now, I know about all the privacy stuff. It's great. I agree with it, but it's not going to make it happen. That's not the way the world works. Wishing that something is true only works in the Wizard of Oz. So, fundamentally, I think the real problem is that what we're down to is that people are saying that this is worth holding because it's volatile. Because it's volatile, it allows you to speculate. You can look for dips, buy dips, and have it go back up again, make profit, maybe sell, go down. But trading something just because it's volatile is no different than what happened in the tulip crisis, or the tulip bubble of the 17th century, in the South Sea crisis. I mean, basically, again and again, what we've seen is that people decide that something is worth trading, and they trade it because it's being traded, right? And you get it stuck in this recursive loop where basically the only reason to actually care about the thing is because it's being traded and it provides these opportunities. When you get down to the actual brass tacks, something actually has to be useful. People compare it to gold. They say, it's a hedge. The only thing I can see Bitcoin being is a hedge. I get that. The problem is that it can't really function as a hedge because you have these other opportunities. And in order to, have it function as a hedge, you need to dethrone the dollar in order, because right now the dollar is the global hedge against so many things. The dollar keeps being popular because people keep accepting it as payment for debt. So the paradox for the Bitcoin people is if you want Bitcoin to rule the world, then you have to make sure everybody pays off their dollar debts first. You think that's going to happen? Not going to happen. Fundamentally, I think it comes down to something that the French philosopher Blaise Pascal said hundreds of years ago. He said, the risks of not believing in God are far greater than the costs of believing in God. And I think that's fundamentally what it's come down to, is that people have convinced themselves that, I won't say Bitcoin is God, but that the risk of not believing in Bitcoin is higher because people are making money out of it. Now, I don't think that anybody should stop trading Bitcoin. If you're making money out of it, trade it. I mean, Clint's right. I mean, you can analyze it, from here to kingdom come, and you can make money if you get the analysis right. But there are some risks. We saw, as I said, that governments don't like it. Yellen is already talking about smacking it down. Quantum computing, who knows? Maybe within the next 10 years or so, the blockchain could be broken. If it's broken, it's all over, folks. Bitcoin's dead. But the critical risk, I think, is that it's incredibly vulnerable to profit taking. Less than 2% of Bitcoin holders are responsible for something like 95% of Bitcoin in wallets around the world today. And especially now that you're getting hedge funds and others coming in and buying Bitcoin for the reasons that Clint explained, that makes it very vulnerable to pullbacks. Because if somebody decides, well, now's a good time to cash out because I've made a lot of money and I want to keep it, that leads to a cascade effect. Because remember, this is all psychology, it's all speculation, it's all momentum. Momentum shifts against you, you're buggered. So my take is, sure, trade it now, but for God's sake, please don't put your retirement fortune in it. You're going to lose.
I want to go back to actually something you said, Harrison, because this is something I've been thinking about with Bitcoin. I think this is where the institutional interest comes in, is because they see Bitcoin as sort of, it's similar to gold in that there's a scarcity value to it. It's hard to produce more gold, take more gold out of the ground. Because of the nature of how Bitcoin's created, there's, at least in theory, a limited amount that can be produced. So there's the scarcity value aspect to it that makes it attractive. But at the same time, it comes down to confidence and what people think it's worth. And I'm thinking about the utility value of these things, because gold, all gold's advantage is that it's physical. You can see it, you can touch it, but gold it sits in a vault. And for gold that gets used, it only gets used in jewelry. And maybe in some, electronics to a limited extent. But is there? I'm tempted to think that there's more utility value for Bitcoin than there is for gold, at least in sort of the digital economy. Because with what you've seen from, like a Cash App or PayPal, there's increasing acceptance of using Bitcoin directly or indirectly as sort of a method of payment and to help facilitate payments versus, you can't do that with gold. I mean, no one walks around with a piece of gold in their pocket trying to pay for a haircut or something. Well, so in the modern economy, is there more utility? Is there a utility case for Bitcoin here over gold?
Yeah, just to push back. I mean, I understand, but I think there are a couple of things. One is that there are parts of the world where people do walk around with gold. India, for example, one of the reasons why gold is so popular there is because it's a long-term store of value for families' wealth. Granted, they don't go and buy, samosas from the corner shop with it, but it does play that role in some cultures. I agree that, Bitcoin does have utility as a form of payment, but that's where the volatility issue comes back to bite you. If you think Bitcoin's going to go up a lot, why on earth would you use it to buy a pizza? You're rather use the dollars that are more stable, because otherwise you're risking future gains on your Bitcoin. So the volatility of the currency of Bitcoin itself actually undermines its own attempt to become a currency. To me, I think that this is a speculative asset. It's something that people are trading because other people trade it. And I believe that eventually the use cases that we have around being able to pay things for it, I'd rather use a stable coin, not necessarily one that's linked to a dollar or something, but something that is not so volatile to pay for things. Bitcoin, sure, put it in your digital vault, just like you put gold in your vault. But eventually, the electricity could go off, the internet could be shut down, and then where are you?
Yeah, just the final thought I have on Bitcoin is it just seems like there's two separate tracks developing right now for it. One is to view Bitcoin as more of a commodity, as an asset class. That kind of plays into how institutional investors are starting to use it now. And then the other track is on the currency side. I think Bitcoin bulls, want to see the cryptocurrency become, an alternative to the dollar. But in a weird way, that success of Bitcoin is probably its most likely path to demise, because governments and central banks don't want to give up their ability to control their own money supply and how transactions are facilitated. And so they could just simply regulate Bitcoin out of existence. In a weird way, it's almost like you if you're a Bitcoin bull, you want to root for its acceptance and being adopted as more of an asset class, and not see the success on the currency side, because there's a lot of threat of regulatory actions at that point.
Right. So it's a fundamentally contradictory process that's involved here, because if Bitcoin did become a replacement for fiat currencies, then it would have very stable value, which means that it wouldn't be worth holding as a tradable asset, which means that people would start to dump it in order to move to whatever the next thing is, which means that it would lose this sky high value and stabilize around some arbitrary price level that would have to not change very much. Otherwise, you'd call it inflation and deflation, in which case you'd have crisis. So can't win, can't lose. I mean, in the short term, I think you can make money. In the long term, I think this is going nowhere.
Well, I have to say I'm a little disappointed, because I was hoping this would be to the death, and it seems like you guys are coming to the same conclusion. So a little disappointed in that. But again, we would love to hear in the comments whether you think anybody got a knockout here or not. And I did want to give you one final reminder that if you'd like to join Ted on Wednesday, please click the link below, reserve your spot now. Gentlemen, thank you very much, and thank you everyone for watching.